I want to cover something that I think most of the XRP community, they haven't connected directly yet to XRP. Because on the surface, look, it looks like a general market structure story. But when you actually understand what 24/7 equity trading requires at the infrastructure level, it becomes one of the most significant XRP relative announcements that I've probably covered in my past 10 years. Now look, SEC Paul Atkins, the chairman, he has announced a public roundtable for September 17th, 2026 at the SEC headquarters in Washington, D.C. to discuss the preparations for 24-hour trading in your U.S. equity markets. Now, he described the shift with the phrase, "We are moving towards a new day and night in the U.S. equities market." The U.S. equities market, folks, it's $75 trillion. The DTCC, which settles the clearing for that market, they just announced that they are moving up their launch to September. Are you with me? And then back in December of 2025, I want you to recall that Paul Atkins says he expects all U.S. markets to move on-chain within the next 2 years. That's right. We're about to go through all of it. We're going to connect all the dots. So let's start with the scale of what the SEC's roundtable actually represents here, because I want you to understand why this is as significant as the DTCC announcement that everyone has been focused on. Now, the DTCC, as you all know, 4 quadrillion per year in settlements. People have correctly identified this as a transformational opportunity for XRP. There's no doubts about that. But the U.S. equity market, the specific market the SEC's 24-hour roundtable is targeting, is $75 trillion. Yeah, that's a big market. Here is the problem. When your bags finally, your brain, it goes into panic mode. You either hold too long chasing the top, or you dump everything at once and you crush yourself on taxes. The fix is right here. Pre-built exit ladder. You decide now at every price target exactly what percentage you're actually going to sell. $3, $5, $10, $20. Each level has a plan. So when the hits, you don't think, you just execute. Look, set the target. 5 is the low, 10's my high. I want a 20% moon bag. I'm never going to sell, and I want to be conservative. Hit save. It creates the exit plan for you. And along each one of those as they're hit, you automatically get an email alerting you that it's time to execute, so you don't think anymore. Cryptofolio CFO, they build this ladder for you automatically. You get a free 7-day trial over at xrprightnow.com. The link's in the bio. Now, the difference is that the DTCC announcement was about tokenization of your existing settled securities. The SEC's roundtable is about the trading and settlement infrastructure for the equity market itself, operating around the clock. And the timing, I mean, you just can't make it up. In a single 6-week window from May to late July, the SEC announced a 24-hour trading roundtable conference meetup, whatever you want to call it, for September 17th. BNY Mellon, you know, the custodian of Ripple's RLUSD, the world's largest custodian with 53 trillion in assets under management, and the Bitwise XP ETF, they announced on July 22nd that they are laying the groundwork for your 24/7 U.S. Treasury settlement with tokenized treasuries by the end of this year. The London Stock Exchange, well, they announced they're going 24/7 trading as well, beginning early next year. NASDAQ, they got SEC approval for 24/5 in April, so Monday through Friday, 24 hours a day. Swift, they just told us that, hey, we got blockchain-based 24/7 cross-border payments systems going now with 17 global banks. Payments, not settlement. Japan just moved their government bonds on-chain with stablecoin settlement. None of these things happened in isolation, folks. They are all part of the same coordinated global transaction to allow your on-chain financial markets. And what do all of them need? What is the common denominator here that every single one of them need? They need settlement infrastructure. They need something that's can run around the clock, that can scale, that costs fractions of a penny. They need XRP. Let's make no mistake about it. Which gets us over to this. When we talk 24/7, we're talking no business hours, no Monday to Friday, no bank hour. This thing just goes. It runs, it stays up, and it's just moving. Money's moving all around the world. US, Tokyo, Japan, you name it. Doesn't matter. It's just going. Doesn't matter if you send money at 3 a.m., it's going to settle. Doesn't matter if you send money at 2 p.m., it's going to settle. Doesn't matter if it's a Saturday or a Sunday or if it's Christmas, it doesn't matter. It is just going to work and operate. It's going to work and operate the same way your cell phone works and operate. You can text any time of the day, any hour of the day, any day of the week. Doesn't matter if it's a holiday or not, it goes through. That is how money is going to work. That is the new world that we're moving to. And this all started when COVID hit. When COVID came, you saw cash, they started just slowly pushing cash to the side. Everything was digital. Whether it was credit card, prepaid card, debit card, it doesn't matter. Cash is like not an option that is being accepted anymore. Everyone, well, I mean, when's the last time you even paid with cash? You don't. Everything you do is card, card, card. Swipe, 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 chip, chip, chip. Now, I want to spend a moment talking about the specific contrast here between the SEC in December of 2020 and the SEC now, live present day, because this is what probably one of the most important regulatory contexts for understanding where us, the XRP holders, are sitting right now. Now, in December of 2020, the SEC under Gary Gensler, I guess we can start with Jay Clayton, sued, left, Gensler came in, and we all know the Ripple lawsuit. We saw a 75% drop. XRP went all the way down to like 12 cents or so. Now, Gensler could have came in and been a hero. He wasn't. He could have dropped the case. Instead, he pursued the case and continued to go after other companies and forced them out of the US. Now, he is gone. Clayton's gone. That era is gone. Paul Atkins took over in 2025. He made a statement. And his statement was that there were really only 2 countries in the world that were working to make cryptocurrencies illegal. And he said that communist China was one of them, and the US through the SEC. That has changed. If you don't believe it, go look it up, because it's a new day. July 2026, crypto in America, we got a new beginning. We got a new future. We are looking to lead in this thing. Your old SEC, all those people, you know who they are. They were forced out. They were fired. They quit. The new people are in, and they are handling all of this the correct way. And they understand how important it is for the US to lead moving forward. So let me give you the complete picture of what's happening here. Globally, we're talking, all right? You got BNY Mellon, who's the world's largest custodian. They announced on July 22nd that they are working to develop a 24/7 US settlements and financing capabilities, while simultaneously laying the groundwork for a blockchain-based settlement system for tokenized US treasuries. Now, they stated what their priorities are. They want an always-on market. BNY already custodians both RLUSD and Bitwise's XRP ETF. The same bank that is building your 24/7 blockchain treasury settlement system, it's already embedded in Ripple's infrastructure. Now, we know about SWIFT. We know they just went live with 17 global banks for 24/7 cross-border payments. Remember, it's only payments. SWIFT has nothing to do with settlement. They made that very clear. You got the London Stock Exchange, one of the oldest equity markets in the world. They just announced that early next year, they will be moving on-chain to 24/5. And then they will expand the hours. I mean, think of what comes after 24/5. They're going to go 24/6? They're going to go 24/7? I mean, come on. You can only expand so much before it's all on. So what it tells me, early next year, they will be testing. They want to be tested and done all within a 2-month window. And they want to get this thing fully up and running 24/7 round the clock. That's where we're going. We got the New York Stock Exchange. They announced they are going 24/7. We have Japan, who moved its government bonds on-chain with stablecoin settlement. They are running live. I don't know if you noticed the pattern here, but everyone is moving to 24/7, 365. Everyone is moving their systems, their back-end settlements, the way the money's moving, how everything works around the world to on-chain 24/7, 365. That is the world they are preparing us for. But the people who've been sleeping under a rock, they don't understand this. So let me give you the fall calendar, because this is very important here. Your next 3 months. September, your SEC, they're holding its 24-hour trading roundtable at Washington, D.C. Paul Atkins is the chair, talking about 75 trillion in the U.S. equity markets, talking about the regulatory framework for T+0 on-chain settlements of equities. We're going to find out what comes out of that. This is the legal foundation that will allow your institutional trading desk to route the equity settlement through on-chain infrastructure without the regulatory risk. October 2026 was the initial date. That has now been pushed up to September. The DTCC's full tokenization platform will be launching. Now, Ripple Prime, as we know, is inside of the NSCC. they have a broker code. When the DTCC fully goes live, we're going to get a real picture here because remember, when they announced the testing, the pilot that just went down in June, I believe only about 20 of the 56 institutions, crypto companies, whatever you want to call it, were involved. There is a lot of names still floating around out there. We're going to find out if we were right or wrong that Ripple Prime, somehow, some way will be used into this system. Maybe it's an option where they get to choose their settlement. Maybe it's baked in and everything routes through it. But that's why we come back each and every single day and we keep tuning in so we can figure this all out. And guess what? TikTok. I mean, we're pretty much in August at this point. September, it's going live. Now, there was a very specific statement I also want to cover that came out of the news within the last week or so. The DTCC's global head, Nelly Socroni, stated publicly in July that they have had more demand than supply. She was describing what happens when tokenized securities went live on the DTCC's rails. She said institutions showed up to participate in tokenized versions of Microsoft shares, QQQ, SPY, treasuries, and Circle stablecoin-related assets. Tokenized with BlackRock, Vanguard, JP Morgan, Goldman Sachs, all in the pilot programs. And she stated that the demand from institutions exceeded the supply of your tokenized assets available. So think about what that means, everyone. The DTCC, the company that runs the backbone of your global financial markets, they are telling us that the institutions, the ones that they serve directly, they are already trying to buy tokenized assets faster than those assets can actually be created. This is the backbone of the financial system reporting a supply shortage in its own pilot program. Think about that. This isn't a YouTuber telling you there's going to be a supply shortage. This isn't a TikTok or an Instagram or a Twitter or tweeter, whatever you label those people on Twitter. Tweeter, I guess, right? The DTCC is telling you there is so much demand, they don't have enough supply to keep up with it. That is absolutely one of the most bullish statements I have ever heard. All while we're been in about an 18-month, 19-month bear market where you see prices have a 75% discount on them. Let me ask you a question. I asked this question on my other channel, the Bullwinkle Blueprint. Go follow it. I don't know why you're not. You've been looking to buy something for a very long time. In this case, 18 months. And you always told yourself, the price is too high. I'm going to wait for it to go on sale. You now walk into that store and you see this thing on the deep clearance rack in the right corner, buried in the back where they put the super clearance. And it has a 75% price tag on it. You loved it when it was at $3, $3.50. You wanted to buy it, but you didn't. Now you're getting it at a 75% discount. You're still not doing it? What do you want it to be free at this point? If I ever was looking to buy something and I walked into a store and I randomly saw it on the shelf sitting at a 75% clearance tag on it, you better bet your ass I'm buying multiple, folks. That's exactly the point we're at. Stop trying to time an exact bottom. You're never going to do it. And stop scrolling through your Twitter page looking for who's making the call, where it's going to go, because none of them know. It's a 50-50 game. There's $2 trillion in this market. Things can change like that. That's going to do it for me. Look, I hope you enjoyed. As always, hit that like. I don't know why you wouldn't. Subscribe, and I'll see all y'all on the next one.